Thanks for stopping by my market report. And I am Mike. A little bit about myself is I'm a loan officer with a national lender. So if you got questions about mortgage rates or these trends or about this report, or even if you're in the process of maybe refinance or looking to buy a property, please feel free to reach out anytime. We'd love to be able to help you guys out. A little bit about this report is we discuss mortgage rates. We talk about what's driving rates on a daily basis. Uh, if you don't know, rates do change periodically. I mean, quite sometimes even multiple times in one day. Something about the mortgage rates are that they are traded on, they are based off of mortgage-backed securities, which are traded on Wall Street, just like stocks are, which creates the volatility of rates. So, without further ado, we'll start off with the first thing with economic reports. The big thing today is inflation data given to us by the Consumer Price Index. I'm not going to go necessarily in order because it's kind of this report came in kind of not so clear, but we'll start with the headline number of Consumer Price Index or CPI for the month of February. So the month over month went from 0.3% increase in the month of January. Forecast calling for 0.4%, and it came in at 0.4%. Now, when you get the year over year, it was at 1.4% year over year in January. However, forecast calling for an uptick of 1.7. It came in at forecast at 1.7%. Now, what we really look at is the core CPI, and that is basically removal of food and energy, which most of us probably have recognized that we're looking at our gas prices rising. We're also looking at our food prices going up. A lot of that has to do with the bottleneck, or at least the food. A lot of that has to do with higher energy costs, but also with the bottleneck of the pandemic creating our supply chain. But let's start off with the headline number there. We had basically no change in the month of January. Forecast accounted for a 0.2% increase. It only increased 0.1%. Now, this one went from 1.4% year over year with a forecast of remaining unchanged. It actually dipped to 1.3%. So on that news, we'll jump over to headline news. Stocks actually were kind of liking for the most part. Nasdaq is actually the only one that is in negative territory at the moment. Dow is actually looking pretty good, as well as S&P. They like the low inflation data, and that's really what we look at is the core inflation. Now, the Fed's favorite gauge of inflation is the PCE, personal consumption expenditure, but because this is inflation that also looks at the consumer side of things, we do look at this does carry some weight as well, the CPI. So let's see how this is playing out in the mortgage-backed securities here. Mortgage-backed securities were up slightly at 2.2%. Now, it looks like we dropped a lot here, but this is due to we had what they call a rollover, which was meaning that yesterday was month end for the month of March. So all those stuff from approximately the 10th of February through March, those are for March loans. That's why we had 30-day pricing on these mortgage rates. And then we start the new month. So today we'll be starting with the new going into April, and then those will be changed. So it doesn't affect any of our pricing or rates. It kind of resets the value. Is what kind of really what it means. So at this point, we're up about 2 basis points. We did start off a little bit lower. We were down about 5-6 points, but now we're up about 2. So right now, either way, it really didn't create any change in our pricing in terms of mortgage rates. So it wasn't enough fluctuation to change there. So mortgage rates remain unchanged. Let's take a look here at the yields. Yields actually started a little higher and actually came downwards. We're down to about 1.51. That's one of the reasons why the stock market is looking a lot better due to the lower inflation. Treasuries kind of came down. Now, we did have an auction for the 10-year Treasury came out today, and they were, investors were buying into it. They liked obviously the little higher rate, but as this was coming down, fewer sellers or fewer buyers were purchasing at the auction. So it became kind of as what they would term a C plus, an average auction. So it wasn't anything great, but due to the drop in yields during the morning, it basically became more of an average. Now, if the yields went upwards, they would be buying in at the higher rate. Now, for us, that adds less pressure on mortgage-backed securities, which helps us out with mortgage rates. So we're not quite there yet. The MBS and yields aren't always on the quite same page. We haven't had the effect from this drop in yields to the mortgage-backed securities as of yet. We're not really seeing that big change. As I said, we're only up about 2 basis points. Where here we basically dropped probably about 2-3 points right now on treasury use, and that could easily be much higher in terms of mortgage-backed securities. All right, so that's pretty much the wrap for the day. Again, mortgage rates are unchanged from what we saw yesterday. And if you guys got any questions, please feel free to reach out. You guys have a great rest of your day. Thanks so much for watching. We'll see you in tomorrow's video. Bye-bye.